Now, don't forget, we're doing a live client-only event in mid-October 2022. I'll be speaking. Ryan Griggs will be speaking. Dr. Paul Cleveland will be speaking. Our whole team will be there. You're going to have the opportunity to meet all of us, and you'll have the opportunity to meet other people, individuals that are practicing the infinite banking concept from all over the country. Iron sharpens iron, so you should be there. It'll be worth it. Look forward to meeting you. Look forward to seeing you. Be there. Be square. In this episode, my friend Paul Lizell joins me as we discuss the infinite banking concept and real estate investing. He's a successful real estate investor, has properties all over the country, and he understands what the infinite banking concept is and how it can be used in the real estate world. I had fun. I hope you enjoy listening. Thank you. Welcome to the Banker's Life Podcast. I'm your host, James Neathery. And I'm always excited to have guests on, although he's not in the studio with us today. He's in his fabulous world headquarters from Florida. And my friend, Paul Lizell, has agreed to share his time with us. And I'm excited for you, the listener, to be able to have the opportunity to listen into a conversation. We've known each other for about 7 or 8 years, I believe. We met at a real estate convention I was speaking or presenting at, and he was an attendee. And he's going to share with us his experience with the infinite banking concept and what he does in real estate, cryptocurrencies, and whatever else he does. So, Paul, thank you for, coming on. How have you been?
Oh, thanks for having me, James. I appreciate it.
So, I don't know your whole background. I just know that you're practicing the infinite banking concept. You're a good guy. You're successful, and you fill us in your kind of background, how we, all the way from the beginning to how we're even sitting down here today. And I'm really interested in your thought process because in my opinion, you adopted the infinite banking concept pretty early compared to other real estate guys. I'm no disparagement, but y'all guys need to come on with it. So you were early on, and just take us through that and let us know what you're doing and how it's going, and just share with us.
Sure. I'll start with when I started investing in real estate, which is going way back to December of 2001. So about 21 years ago now, I started investing in real estate. So I bought my first property, fix and flip. And at the time, speaking to banks and everything, I was working for a small community bank at that time. I was at that point, I was a business development officer. But before that, I was a commercial loan underwriter. So I learned to underwrite these loans, mortgages, and all that kind of stuff. Then I became a loan officer after that. Then went to Citizens Bank, larger bank, for another 3 years. And basically my whole idea was I was never going to stay in banking. Banking was not where I wanted to be, but it was a means to an end for me. So I started just basically stocking cash from these fix and flips that I was doing. And then in 2004, it was around, I want to say, early or middle November of 2004, when I quit my job there, quit working for the bank, and went full time into real estate investing. What I needed to do psychologically, this was just for me, James, I needed to have 18 months worth of bill paying ability in my checking and savings account, right? Knowing that I had 18 months to be able to make more income, future above and beyond, before I was willing to go out on my own. So that's, once I reached that 18-month goal, I cut loose, went into it, and was doing fix and flips, went through that financial crisis in 2008. And this will lead into the whole infinite banking concept of why it's so important and why it's so powerful too. Because what happened is, during that financial crisis, all the banks froze all credit lines. They cut everything, home equity line of credits, business line of credits. If you didn't have it fully used, you'd lost it, right? You lost all that ability. But for the people that had these policies, these insurance policies, you're able to tap into them and utilize them when they needed them. So I actually borrowed some money from other investors who I later found, I didn't know where they had it at the time, later found out they had used it from their life insurance policy. Yes.
No way. Well, a couple of...
Yes, I did not know that initially, but that's what I found out later. So I started borrowing from them that, and I didn't really dig into or know anything until I met you. I think it was James, in the year 2014 or 2015 at a conference in Dallas, real estate investing conference. We met, we talked. I want to learn a little bit about it because I heard you speak there, and you gave me the in-depth. I'm like, all right, I got to do this. This is right up my alley. I got to take advantage of this. So that's kind of what got me started into the journey.
Perfect. Well, look, you know why the the banks closed the credit lines, limited the credit lines, and called notes and did all that in 08?
No, tell me.
Because they can. And they're not taking the risk of loss. They
don't want to risk, right?
They don't want any risk. And that reminds me too, when you talk about banking, and I didn't know you had a banking background, right? So you went from an underwriter to a loan salesman, basically is,
yes,
no disparagement, but that's what the vice presidents of banks do, right? Lending officers. Then I think there's 3 or 4 C's in the banking industry. I can't remember the fourth one, but it's collateral, cash flow, and character. I can't remember what the other C in banking is, right?
I'd be credit.
Oh, yeah, credit. There you go. Yeah, the 4 C's of banking. Oh, that's interesting. And so I didn't know, like I said, I didn't know your banking background.
Yeah.
And then here you are borrowing money because of the third-party lenders are tightening up their strings, yes. And you borrow money from fellow real estate investors. Well, how and when did you find out where they were storing their capital to lend it to you?
So I think I met him at one of these real estate investment meetings out in suburbs of Philadelphia, where I was living at the time, DIG meeting, and it's the biggest group in southeastern Pennsylvania. And I met a few private lenders, and that's when I got my first private lender loan. And that's the first person who told me that they utilized that. They also use their IRA, obviously. Sure. They might even had a self-directed with a solo 401k type deal. So they use multiple sources that they've used to do that. And that's when I first heard about it. I honestly, though, James, didn't know what it was still at that point, because we're going back into 2009, 10, 11 timeframe before I met you, a few years before I met you there. So that was still a whole new concept with me. I knew all about the IRAs and borrowing against your IRAs and all that. But there's a lot of limitations with the IRAs, a lot of government involvement where, as you explained to me, there's really not the government involvement in these life insurance policies that there are in the IRAs, the 401ks. You don't have those same limitations. You can pull it out for any reason whatsoever where, if I need to borrow from my 401k or my IRA, it's got to be for specific things, such as like whether it's real estate or whether it's health or education. That's pretty much what you're limited to.
And 50 grand or 50% of the value.
50% of the value, which is the big key thing where life insurance is more than that right from jump, after you fund that account and wait a little period of time, at least 30 days or so. Yeah, so you already got more than a jump right there.
And the loan request at a life insurance company is nothing more than a service form, right? It's a multi-purpose service form. And there's no place on there do they ask you what is the purpose or the intent of use.
Nope.
There's nothing. Here's the loan. This is the amount that I'm asking for, and send it to me. The only thing that they really ask you, and it's a series of, check a boxes. Do you want a check or do you want it directly deposited? Yeah. I mean,
it's so simple. I literally go online, get the form, make the loan, boom, and within 4 or 5 days, it's in my account. It's really quick and simple and easy.
Yeah. And the life insurance companies, some are faster than others, but they're trying to get into the 21st century, right? So all of that can be done online. That's awesome. All right, so that had to be a moment, and you're like, oh, so this is a new entity that these people are drawing from or against to lend money. So did you spend much time thinking about life insurance, that concept, when you heard about it in Pennsylvania?
So I started to dig into it. You're right. Nelson Nash's stuff. So I started to dig into it. There wasn't at that time a ton of it on YouTube, right? You didn't have a whole lot of information on YouTube back then on that particular thing. I think there might have been a newsletter or two that talked about it, and they called it the infinite banking concept, right? Which we've all heard about. And might have called it something else too. So I heard about there. My grandmother showed it to me. I read a little bit about it, but it wasn't really until I met you that I got a little bit more. I got basically, if you put the equivalent of cryptocurrencies, you get orange pilled by Bitcoin. You gave me the red pill, right, on the life insurance policy. So I totally understood it and you put it in plain, simple English, which is funny though, because I tried to speak to a lot of investor friends of mine about this. For whatever reason, they can't wrap their heads around it. And I don't know why. It almost reminds me of, so my minor in college was economics. Finance was my major. Economics was my minor. And I remember being in economics classes, a bunch of like the higher end ones, like labor economics and some of these other ones. People were lost, and I just didn't understand why they were lost. And I guess it's a similar thing to that. I think they're just overthinking it. Yeah. That's what it comes down to. Because if you're struggling in whether it's macroeconomics or micro, you're overthinking it and you're not looking. I mean, the concepts are pretty basic and simple. And this is really basic and simple to me.
Yeah, it's not complicated. And I see a lot of, and real estate investors are like anyone else. I mean, they may be more entrepreneurial or what have you, but we're all the same. Essentially, it's like, it seems to me that they have a hard time getting past the word life insurance, number one. Yeah. And then they have a hard time because they focus on the interest rates, and the financial world really wants to boil life insurance down to a premium and a death benefit. And then the liquidity, the loss of liquidity in the early years, that stymies or hinders, real estate investors and just, across the board, no matter what their background is.
You got to look at it. I totally understand. I agree with it, but you got to look at it I look at it in multiple ways. I look at it as a tool for me to borrow and grow my business. The other way I look at it, it's a retirement vehicle potentially for me too, right? Because I could take loans against this down the road that I don't pay back. So it depends how you look at it. I looked at it as a two-thought concept. I talked to you a little bit about that back then. And and you explain how it could be used and how if you just don't pay it back, it's a loan that's not paid back, right? I mean, it's pretty simple. So you just lower the value of your total payout of your death benefit, in essence, is what it is. But it just gives you such ease of use. And I'll give you a great example. So I used this on a property in the Pocono Mountains in Pennsylvania, East Stroudsburg. It was a property I picked up on auction. I bought it for $40,000 and put $10,000 into it. So I was in it for $50,000. Rented it for about a year and a half, maybe 2 years. And during that time, the market really increased. I ended up selling this property for $155,000. So what I ended up doing was obviously paying my loan back, but then that gave me money to pay the future paid up additions riders for future years, right? So be able to stash some money into the future.
Well, so you only had 10 in the deal, unless I missed something. You only had 10 in that. Right. I only had
$10,000 in repairs into that property. That's correct.
Okay. Yeah. Okay. I got it.
So $50,000 in total. I pulled a total loan was $50K. I ended up making a net after paying commissions, everything about $150 on it. So 50 plus I had $100K, which I ended up paying, like I said, future paid up additions riders. Plus I also used it for other projects too. So what that turned into was phenomenal. So you see the power of its use and what you could do. Part of it was lucky with timing, right? Mm-hmm. When I bought in the market, it was down and the market ended up skyrocketing. It's not always going to happen, but timing is pivotal, obviously.
Yeah. That had to just make you want to look for the next one to do one more, 10 totally. More, right?
Yep. Yeah, I've got a few different loans right now in both cryptos and real estate right now that I've utilized my policy for. So I'm trying to use every dollar I can whenever I can.
Yeah. So what do you do? What do you do in the real estate world? And then, share with us what you do in the crypto world. So two different worlds, but what are you doing?
So in the real estate world, I buy almost exclusively in online auctions. I do buy some from wholesalers, and wholesalers are just people that get properties under contract and sell them to another buyer, whether it's an investor or an end user. So I do buy from them as well, but mostly online auctions. I bought in 44 of the 50 states, bought and sold. I have a 12-unit building in Casper, Wyoming, a 5-unit and 3 singles out there in Casper and Gillette, Wyoming. Sold all my rentals in Pennsylvania, shifting them down to Florida where I am. I have some in Dallas, and I'm looking to add some in Tennessee too. And then what we did was we opened up an educational. There was a lot of interest when I was on a lot of different podcasts from people who want to learn how to do what I'm doing. So we created an educational company. It's still fairly small, but it's growing. I think we've got like 49 students right now in totality. But that still continues to grow. And we teach people how to do what we're doing now. And that's been fun. It's a lot of fun.
Perfect. So you, and I didn't know that. I think we spoke last week. I didn't even realize you'd moved to Florida. Silly me.
Last August. I got sick, James, of writing a check to the state of Pennsylvania. I need to go to a state where there was zero income tax. That was one I've been pushing my way for years. So last year, finally had a check at $20,000 to write the PA. I'm like, all right, it's time to move. here's your choices: Wyoming, Florida, Texas, or Tennessee. Those were the zero income tax states that I targeted. And the only reason I chose Wyoming is because I have rentals there, and the real estate taxes are the cheapest anywhere I've seen in the country. And the cost of living is pretty affordable too, but it's super hard to fly in and out of there. It's very expensive. You got to either go to Denver or Salt Lake City and take a hopper up there. So it ends up being really difficult, real expensive. So then we started targeting either Dallas, Texas, where we were actually looking at last March. We were there. We actually made an offer on a property. And then I realized we're going to visit my dad in Naples a week or so later. So I told my wife, all right, let's hold off right now. Let's go look at Naples and see if that's an area we want to go. So we went there, visited for the second time, and looked at some properties. I'm like, all right, yeah, this is where we're moving. She's like, why? I'm like, well, I decided I don't want to move twice. And she said, why would we move twice? Because I'm not retiring in Dallas, Texas. That's not where I'm going to retire. I want to retire a place where there's water or beach, so Florida is going to be it, even though we love Dallas. Dallas is great town, great people, great vibe, great for business, great for everything. But Naples ended up winning out.
Just not for retirement. I hear you.
Exactly. I didn't want to move again. We got 4 kids. One of them was going in freshman year of college. Now he's going to sophomore year. We had a junior in high school. We had a freshman in high school. Now they're a senior and a sophomore. And my daughter's now going into 4th grade. So we figured now is the time to go. Biggest reason that I moved, though, besides the income tax thing, I knew in the Northeast they were going to lock down the schools again with COVID, make these kids wear masks and go virtual again. And for my boys who are older, that's fine. They could deal with it. I still don't like it. But for my daughter going into 3rd grade, that's not good. You're not learning right. There's too much goofing on going. They're not learning. So Florida always had schools open the whole time. And DeSantis done a good job down there. Abbott's done a great job down there in Texas too. But DeSantis is he kind of set the bar high.
Yeah, they can all learn from DeSantis.
Yeah, totally. Abbott watched DeSantis and learned a lot from him for sure.
I hope he doesn't capitulate. I hope he continues.
Yes.
So I
hope so too. Knock wood. I don't want to lose him in Florida, but I think he'd make a pretty good president. We'll see.
Yeah, I get it. I mean, if we got to have one,
That's right. If we got to have one, that's the key right there. I love it.
All right, and so
self-governance.
You're in the process of moving, selling properties and then buying properties down in Florida, right? Is that the residential? Is that what I heard earlier?
Residential, I'll do some commercial because anything over 5 units or more falls into the commercial. So I'll do that if there's good multi-unit opportunities. But Florida right now is still way too hot. So I've gotten some properties that I'm reselling because the market's so hot right now. Now I think I'm going to wait unless something really pops up that's great. I'm going to wait till I buy in Florida till things settle a little bit. And I'll continue buying the other markets and keep adding in Wyoming, maybe keep adding in Texas and in Tennessee for now.
I got it. Well, that's kind of where I was going. What kind of buying activity are you doing down there in Florida? Because everybody I know that, is selling. Of course.
It's the truth. I mean, you look at it from Redfin has great data on real estate too. So if you actually just put your home address in Redfin and track it, it'll tell you what it's going up and down each month. And it'll tell you what it went for the year. So the house we sold in Pennsylvania went up 11% over the year. Our house in Naples, 41%, same year.
Yeah.
So we made the right choice there temporarily. It's unrealized gains, but still.
Right. That your Uncle Joe Biden wants to tax you on, right?
He does. He wants to tax me on unrealized gains.
Yeah. Give him time.
Oh, he'll try to work that. No doubt about it.
Yeah. So what else are you doing? Not that that's not enough, I mean, do you get up every day and just look at the online auctions or,
We do that. I do that a lot. So, and obviously we have coaching classes for our students. So we train them on that. I do the podcast. I do daily videos on the YouTube channel, The Virtual Investor, that channel's called. And I'm into cryptos, right? So I started getting into cryptos, started buying them in 2017, around May of 2017. That's when I first started buying Bitcoin. I first looked at it at 2013, but didn't know how to buy it, where to buy it. And I was knee deep in real estate at that point. I think I'd done 134 deals that year. So, and that was just me being a solo entrepreneur at that point where I was buying them and reselling them myself. In 2014, I hired a disposition manager. So now he handles all the sales for me. And now I just handled the acquisition. But now I've had students take over. A lot of my students that have been pretty good and successful have taken over as acquisition managers for me. So now I'm kind of backing myself out of that business, just focusing more on the crypto side of stuff. And obviously I'm probably splitting it probably about 60 real estate, 40% cryptos right now, as far as the educational side and as far as what I'm going on there. Crypto space changes so quick. Real estate's slow to change, as you know, much slower than a crypto. Technology just moves so fast. So we created an educational platform there. It's tiny, it's really small, and I'm going to continue to grow that one. But I'll tell you how I used a life insurance policy in 2020. I think I pulled it out in March or April 2020 when the COVID lockdown hit. And Bitcoin had dropped down to 4,840, which meant it was cheaper to purchase Bitcoin on Coinbase than it was for miners to mine it with their computer. So I'm like, all right, it's not going to be cheaper to do this again. I told my wife, I'm like, I'm gonna buy more Bitcoin. She's like, are you sure? Like, yeah, it's the future. She's like, all right, if you think so. So I pulled a $25,000 loan out of life insurance policy, bought 5 Bitcoin. And then later that year, end of 2020, I think it went up to 30 grand. So I did really good on that investment too. That one turned out really, really well.
Did you sell it at 30 grand or did you keep it?
I did not sell in 2020. I did not transfer, do anything until 2021. So I was just a hodler. I did not sell one crypto that I bought from 2017. That first crypto I sold was 2021. So I was a hodler, what they call a hodler, which is hold on for dear life.
Hodler.
That was somebody who just bought and held. Funny story. If somebody wants to go on YouTube, that the term hodl came out because of a combination of a guy missing his girlfriend and drinking too much bourbon. So he was a trader. He was trading cryptos, and he was hammered on bourbon and trying to make a trade. He screwed it up, didn't do it. He goes, oh, I missed a trade. I guess I got a hodl. And he meant hold on. So that went viral.
Oh my gosh. Never heard of it. I love it.
It's really fun. Somebody interviewed him. It's like an hour plus of him getting interviewed talking about that story. It's really, really funny. So the term hodl, HODL, came about because of that. And I am mostly a hodler. I buy to hold because I'm mostly looking at cryptos with like a 5 to 7 year time frame for the most part. For the ones that I do invest in, because gotta be careful though, because there's a lot of bad cryptos out there. And just like the .com, if you remember the whole .com era when that went belly up, right? When that went boom, about 80% probably went away. Only your Googles, your Facebooks, your Amazons, your good companies hung around, and most of them went away. So that's going to be the case with cryptos here too, as they've been hammered from, I think it was November 21st was Bitcoin's high of around 69,100. It dropped down to 18,000 about a week or two ago. So Bitcoin does these crazy corrections, about 70 to 80% corrections. So when it hits that area, that 70, 80% drop down from its all-time high, it's generally a good time for somebody to dollar cost average in and start buying. It may go down a little bit more still from where it is, and it's recovered a little over 22 right now, but it could drop. I could see it dropping down to as low as 12, but probably more likely at 14 to 17,000. And it'll be there quick and it'll shoot right back up. It won't stay there long.
Well, I think I'm a hodler. I didn't know that until today, but so look, as like the real estate market, look, the banker can do anything they want. I get that, right? And if you're doing 134 deals, in real estate 7 or 8 years ago, I mean, you're working.
Yeah.
So
it was a ton. Yeah, I've made it to where I do like 60 to 80 per year now, which is way more easy to manage, and then focus on the good ones. Don't go after every deal. Just try to focus on the low-lying fruit as much as possible.
Sounds to me like you're getting lazy in your old age, sir. I mean,
that's right. As you get older, try to get lazier and smarter.
Or comfortable, really. And so look, you go from 130 down to 60 and then hire people to handle those. I like it.
Yes, that's right.
And then it sounds to me like you're hanging out on the beach. I mean, I don't know, but
I'm trying to as much as I can. If it was up to me, I'd be at the beach, 4 or 5 days a week. But I only get to go. I usually do once or twice, which is great.
So 60-40, splitting your time between the two, real estate all over the country. because Florida's too hot right now, and 40% to crypto, right? But then, you've got help. I like that. You're just leveraging, right, your
Yes.
time and your knowledge. Other people doing the acquisition, or you're doing the acquisition.
They are, as much as I can. I'm pushing as much off my plate and onto their plate as much as possible. And it's a learning curve for them. So they're learning the whole process of what goes on here, because it's more than just getting a property, winning the bid, right? And you got to send earnest money deposit in, then you got to get all the contracted paperwork done, right? Get it over to the title company. And if it's in an HOA or condo, you got to get all those association docs. I'm dealing with that right now on 2 different properties I have, just getting all of the HOA docs. So one of them happens to have 2 HOAs attached to one community. I have no idea why, but has 2 of them attached to one community. So we got to get all those things, all those ducks in a row so we can close on the 29th of July here. So that's a part of the time. Like, that's the stuff I eventually want to get fully away from and have other people just handling that, where I can sit back and just kind of look at the numbers coming in, decide what markets to go into, which ones to steer clear of, and where it looks like the future trends are taking us.
All right. So, and then doing the education, and then doing the digital or the social or the online work that you're doing. I mean, do you put that, the online, the real estate courses and education, the mentorship, and, the podcast, do you put that in the 60% of the time in real estate?
Yes. In the real estate. Yeah. Because that's largely what it's falling into right now. The amount of time on that kind of stuff with cryptos is very minimal right now. It'll eventually grow, but right now it's more minimal. It's more focused on the real estate side.
I got it. All right. So share with us some good deals, like the one you did on crypto. Share with us some, if you will, to what extent you will, on the real estate. What have you done with the life insurance loans in real estate? Is there any other deals? I mean, that one was, $150,000 on the deal was, the time period, I think was, you said a year and a half. I mean,
year and a half or so.
Yeah. That's a pretty good deal. I mean,
that's a good one. So I got one right now that is a lot that we bought in Naples, Florida for a little over $21,000. So I pulled a loan out for that, purchased that. And I partnered with a guy on this. So we're jointly doing this, but we're listing it to sell it for $99,000. We'll probably sell it for $90,000 or so. And we'll split those profits. Basically what I end up doing, my whole objective with this one is just to fund mine and my wife's life insurance policy again with it, to pay the additions riders, just keep funding those with the profits on that.
I got it.
So that way I don't have to worry about it coming out of like the regular everyday income that's coming in, just from these separate sources. A lot of times I'll earmark it, utilize it for that. Another thing I used it for was that 12-unit building in Casper, Wyoming. So I did pull out a larger loan on that one, because that was a purchase of $430,000, and we put about $400,000 into this property, and it'll probably appraise for somewhere around $1.5 million or so, somewhere between 1.3, 1.5. And I'm going to refinance it, pull that cash back out of it, pay my private lenders back, who I borrowed money from on that, pay my life insurance policy back, and then hopefully put a couple dollars in my pocket and earn, hopefully monthly income, nice steady monthly income from that.
Yeah, I like it.
There's a couple examples. I've done a couple of these smaller deals, like these $25,000, $50,000 deals for life insurance policies. And say, for example, one of them that we bought in Amarillo, Texas, not too well. It's probably a few hour ride for you, probably 5 or 6 hours from where you are.
Yep, 5.5, 6.
Up there in the Panhandle. Yeah, it's a long ride. So one of them that picked up for 47 will probably sell for around 75. Pretty good return again on that one. So you could just do these deals endlessly with it. Then I'll just pay the loan back, right? And then just do it again, rinse and repeat, just buy another property with it. Now I'm using my own money instead of having to go out to borrow from a private lender or from Kiavi, which is another real estate lender, insurance, or Lending One or Lima One Capital, or some of these other resources. I try to use the life insurance funds first. So one, it's way cheaper, right, than when I'm paying for these other things, and I'm utilizing the fund. I want to utilize that. The whole purpose of this is to use for these things, right? And crypto too. So I'm using it for cryptos too. I'm using it the dollar cost average into Bitcoin right now, and a few of my other favorite ones.
I got you. And so it sounds to me like you're living the dream down there in Florida. Beautiful state, great governor, if you got to have one. And then you're looking at the deals as, whatever method that you've created and refined. I mean, you're sticking to that, and then, offsetting some of your responsibilities and authority to others. And, it's like, dang, it sounds like you already retired.
Trying to semi-retiring, trying to. Now, I did forget one. We funded a student deal recently too with that. So I'm charging the student, I think 12% interest at one point on that. And I think my loan is around roughly 5% or so. So I get a nice little spread there. So you can utilize these if you just want to become a private lender. If you want to lend money to somebody like me or another real estate investor out there, somebody getting into business, you can utilize it for that, right? Create your loan paperwork, get it set up. You can get paid monthly payments, start paying your insurance policy back with those monthly payments. And you just create that spread there. So there's a million different ways to skin a cat with these things. It's literally like just using it for your own bank, right? It's your own bank that you have.
So did it help or hinder you with your background in finance and economics?
Oh, it helped huge, right? Just because I had some kind of a basic understanding. And back in the day, I actually had my life insurance policy when I was working for the bank, because I got licensed and insured on life insurance and Series 6 and 63 license as well. So I did have a base understanding of life insurance policies. I understood the whole life policy, the term and the different kinds. There's a million of them out there in hybrids and stuff, as you know. So I did have a background in that. And of course, the finance background and banking background, that all did help. And even back, what really helped me in real estate as much as anything was I used to contract work for my uncle from junior high all through college. So it gave me an understanding of electrical, plumbing, painting, framing. We did additions. We did many roofs. I don't like doing roofs, but I did many of them. Siding, windows, doors, everything. So it did give me a nice base of knowledge to understand what a whole rehab is about, right? How to fix foundational issues where people, if there's foundation issues, a lot of investors run from them. If it's if it's local to me, I don't mind them. If it's in another state where I can't see it, do anything about it, I won't do foundation issue stuff. But if it's local, I'll do it. But that is one that'll scare off a lot of investors, but you can get great deals.
Yeah, I got you. I didn't realize that you had the insurance license, a securities license at the bank. So you were already able to move way past the word life insurance whenever you're introduced to the infinite banking concept. Yeah. And going back to
it does give you a big advantage, James, with that. When you take those courses, you understand and you know what each different type of policy is. But I didn't know the use case. They don't teach you how to use them like this, right? They don't talk about anything like that in those classes. So that was foreign to me from that. I had to get over that part. That was my biggest hurdle I needed to get over, for sure.
I got it. Well, it looks like you've done a good job. And going back to your roofing days, did you ever do wood shingle houses?
Yes, I did. I did cedar shingle, and man, they're slow. They take a long time. They're beautiful, but it's a process because you're breaking pieces, so the seams never, they're always staggered. It's just slow, but it's beautiful, and they last a long time.
Yeah. Back in the day, I did a lot of remodeling. I mean, and I was a roofer's helper and, lugging those bundles up on those really steep pitched roofs and, just brought
no fun.
No, that much closer to the sun, from
and that angle, you're feeling it. You are just literally taking bottles of water, just dumping on your head, especially where you were doing it in Texas. Yeah. It was hot enough in Pennsylvania. Texas is way hotter.
Yeah. Those are days I don't miss. And I'm a land guy. I like my feet on the land. Yeah. Right. So
me too. Yeah.
So at the, I don't know who listens to this other than they're really cool people, and I can't imagine how many connections you have and how many people, listen to your work. But if they're into real estate, whether they're brand new, you have some resources for them, some coaching, some education content. And if they're, further along in the real estate and don't know about the infinite banking concept, and I don't know anything about crypto other than it's really volatile. I think that, it's a stepping stone to get the population to accept cashless currency, my opinion.
Correct.
And so
yes.
I'm a hodler, which I just found out today. But my point here is, Paul, that no matter where you're at in real estate, I think education is the key. You've got to work with people that resonate with you. And so if you have resources available, we'll put them in the notes below and the links below. And, if you make some connections, it's great. They're only going to learn something if they make an effort, right?
Absolutely. Yeah, there's a lot of our students, believe it or not, our most successful students are people who did direct mail back in the day, sending out postcards to homeowners, and maybe did a couple deals here or there, but didn't like it because they didn't like being married to their phone, had to answer it every time it rings, or have to deal with the hassle, having to have an acquisition manager and somebody else to pay. And they stumbled upon our concept with what we do is where we don't ever have an acquisition manager if we don't want to. If you want to just sit, if I just wanted to sit there and do 15, 20 deals a year from my house, I could do that and live a good, comfortable life and just sit there and bid on auctions, do the analysis there, buy them, either make a couple of repairs or just try to sell them as is. It's easy enough concept to do, but the beauty of it is you don't have to get into marketing and sending out postcards, spending $3,000 or $10,000 a month on direct mail or do pay-per-click and all that kind of stuff. It's just your time you're utilizing. So
I gotcha. And if they're going to go into, I don't care what people are doing, they should be accumulating capital that they control. And I think the best place to do that is within properly structured life insurance policies with, a mutual company. And there's probably, 15 or 20 mutual companies across the country that you could do this with. But when you go through the vetting process of a life insurance company that you can practice the infinite banking concept with and check all the boxes, we really get down to a handful of life insurance companies, and I'm not going to mention their names, but, I know you own 2 different ones, and that's really about all I'll say to your personal business. Other than, I don't know, you may with all those deals you're doing, you may want to increase your premiums. I'm just saying.
Yeah. It is something I'm thinking about, James. I'm definitely thinking about adding more for sure. And I'm sure I'm going to in the very short term.
Yeah. But the listener really should take the opportunity to vet this idea of the infinite banking concept, whether or not it makes sense to you. And it should, in my opinion, make sense to everyone to control the banking function, because in my opinion, I don't care what you're doing, but especially in real estate, if you can control the banking function, you're just that much further ahead. At any time, all of these notes are callable, and I understand that non-recourse loans are available, but most people in the real estate world don't own them. All right?
Yes.
And so anytime the bank can change hands, they can go through and reshuffle their loan portfolio. They can reclassify their loan portfolio. Oh, that was an A loan. We're going to make it a C loan. Oh, that C loan or B loan's a D loan, and we're going to call them. Notes are callable. And so control is probably one of the most important things we can do. And then not only while we're controlling things, our cash flow, where our money resides, we might as well control the leverage if we're in real estate, and we absolutely should consider controlling the banking function. And if we don't, so banking is, like Nelson says, right? Banking it's the oldest profession in the world because somebody financed that first profession that is normally called the oldest profession in the world. So banking is, and if you abdicate your responsibility of controlling that banking function, it still exists because banking is, and someone else is going to perform the banking function and they're going to profit from it. And that's ultimately what we're forfeiting or bypassing or giving away when we don't become our own bankers, right? So
totally control, like you said, James, most important thing. Let me give you an example from a real estate investor standpoint here, just recently, because, the market's changing, everything's shifting. Interest rates have shot up. They've more than doubled this year, or had doubled at one point, which has never happened in the history of the United States. It's never in the same calendar year doubled interest rates for mortgages. So with that, these lenders that we go to were pulling back. So there's a few different properties I was going to get financing on. And originally they just required a BPO, and a BPO was just a broker's price opinion, cost a couple $100 to do. So I spent $600 for these 3 different properties to get that done. And then they email me a week later saying, hey, we can't do those BPOs anymore. Our lenders are pulling back because of market conditions. They're afraid of recession. they now want an appraisal. An appraisal is going to be $600 per. I'm like, what happens to my BPO? I just paid $200 for it. Sorry, you're going to have to eat that and just get. So this is what it's talk about, like having a power within your hands. This is why you don't want to be relying on the banks. And this is why I'm trying to make as many relationships too with private lenders, people who want to lend money out against the real estate here and just get a mortgage position here for the short term while we're holding them till we refinance them. So that's why it's important to have these policies so you can control that, so you can utilize your own funds and do it. And it's losing that control of the money is the biggest thing. And you hit the nail on the head when you said that, James. Yeah. Hit the nail on the head big time with that.
Thanks. And then too, most real estate investors I've learned and seen and experienced over the years, they rarely ever value their own time, effort, and energy. They strictly focus on, and I get it, you're trying to make the deal and try to be profitable and not go backwards. I get that. But most people, and especially real estate investors, they don't even value their time. They don't put that value of their time anywhere in the deal. Now, in a situation like yours where you're teaching people, that's something different. Then, obviously they see the value of your time. You see the value of your time. And, but you didn't start out that way, or, no. You started out, you didn't even think about that. But, and my point here is it's important that, when you're looking at life insurance, you're typically looking at life insurance illustrations, and then the real estate investors almost always focus on the rate of return, the interest rate, or the dividend scale, or the guaranteed increase in cash value, or however it's presented, and that's only part of a function of a life insurance policy. And it's only a very small part of the deal that you're going to go do anyway.
Yeah. Exactly. You're going to be doing this deal anyway. Why not fund it yourself if you can?
Yeah.
I mean, it's simple. It was simple setting up a budget for me for what I could afford for at that point when I created this policy. And now that I can afford more, I think like you said, it makes sense maybe do another policy too, right? Yeah. Another whole other policy you're coming up against. And I did policies on my kids. And the reason I got policies for my kids is because twofold, right? Back in the day, I've really become anti-college, even though I'm a college grad myself, because these professors you're not getting your value, right? When I went there and graduated Drexel, it was $18,000 or $20,000 a year. Now it's $76,000 a year. That's unaffordable. Kids are coming out with mortgage payments, and you can't bankrupt it or get rid of it. So I'm not a fan of it. I don't think you need college education anymore. You can come out at high school. My middle son gets it. He's going to go to trade school next year and go into HVAC, which would be great. Because it'll be printing money because there's such a shortage of contractors. And, whether it's electricians, plumbers, or HVAC guys. But I was talking to my electrician. This is actually a really good point that I never thought about. He was pushing my son to HVAC. I'm like, why? And he goes, because electricians, all the new electric, all the stuff we put in now lasts 50 years. So I'm doing a job and I'm doing it once. Yeah. There is no there's no repeat, right? And I'm not going to get repeat business here. Every once in a while, a fixture will go bad and I'll come out and replace that. But HVAC, those things have really short life cycles, especially in Florida where the air conditioning is constantly going. It's like those guys are printing money, right? So it's a great point. Now, the trade schools are up 35% this past year. They're up 35% from their normal enrollment. So people are starting to get it and getting away from the college, the overpriced college. This blows my mind, James, that you can bankrupt a hospital, which actually helps people, but you can't bankrupt a college, which doesn't really educate you. You can call it education, but it's really more indoctrination. And you get some basics. You learn how to deal with life. You can pledge a fraternity or sorority or whatever, and you're going to learn a lot there. But it's unnecessary. It's totally unnecessary anymore. And I'm hoping that we're going by the wayside here with colleges. I don't mean to go on an anti-college rant, but it's ticking me off. I'm paying $56,000 a year for my oldest son right now. And I think he's just going to end up working for me in 4 years down the road. So listen, did he really need it?
Yeah,
probably not.
Yeah. I mean, I appreciate you sharing this. I have, my views and my opinions as well, and it's on purpose that you can't bankrupt those. Right. It's on purpose.
Yes.
And then, you talk about these the student loans, I see solutions in people's minds. It's like, well, I'm going to defer it for 20 years and then they'll write it off, right? Oh, okay. So that's the solution. You're going to let the government control your solution. And so you're going to pay interest on that whole 20 years. Right.
Yep.
Okay. And then if they don't change their mind, and when do they never change their mind? Right. Yeah. Then you're going to let it go. I mean, that may not be the best solution. And I see dentists and doctors. I mean, they graduate with 3, 4, 200. I've seen an $800,000 student loan on a dentist a couple of years ago. Now, I'm sure him and his wife or future wife are living like they were already dentists while they were going to school or whatever their situation was. But that's ridiculous.
It's ridiculous.
Yeah. And then I was talking to a young man the other day, and he's out in the timberland, I think Mississippi, Alabama, Georgia, somewhere around there. And we were having a conversation. He was a client for a couple of years, and I should probably get him on as a guest because sometimes they tell their story better than I can, you know what I mean? Because it was theirs. But he's like, James, well, I work around these guys that are educated, and they're educated in economics and finance, and I don't know what his education level is, but he's out in the field. They work him like a government mule, and he's like kind of felt less than. And I'm like, listen, man, that's between your ears. He's saying, well, these guys, his coworkers, what have you, have degrees in economics and finance, but they always seem to be short of money. Right. Yeah. And here, this guy's out here working, and, he's buying raw land, whether the timber's on there or the timber's already been harvested, financing it and selling it. And he told me this one deal, and I loved it. He bought some land that a timber harvester, an investor, had already bought the land, harvested the timber, and he needed to sell that property to buy the next deal. Right. Nothing new in real estate. Right. Nope. So he buys it, and then he goes and he financed part of that deal from his life insurance policy loans. And then he finances a bulldozer, right? Strictly from his policy loans. He improves the property, Paul. He puts a road in there from a gravel pit that's already on the road, and, a couple of gates on the property, whatever, holds it for a year and makes a tremendous amount of return, probably a greater annual return than the guys that he works with earn in a year that have the financing degrees. And here's just, somebody that's willing to get it done, doing things that they already know something about, and then they have access to capital. Man, it is the antithesis of what we have going on in the financial world today. So
sure is.
And it just
it sure is. That's awesome. That's a tremendous story. It's an example of somebody just going out and doing it, right? It's really what you just go out and do it.
And then he tells me, James, I'm going to sell the bulldozer and make $10,000 on that.
That's right, because the market went up on that too.
Right. Whatever.
God bless him. It's great.
I think he's got some mechanic abilities, and he bought the bulldozer. It needed some work, so he did the work, used it, made a profit on the property, and then make a profit on that. I mean, but that's what it's all about. It's what's next. Is it the next? What is next? What's the next thing you're going to finance?
Yeah. So. And you always need something to finance, right? Whether it's real estate or a vehicle, right? If you're going to buy your own car, buy a new car, why not just finance it with this? Yeah. Same deal, right? Same concept. Or like he did, a piece of equipment. You can finance anything with it, lawnmower, whatever.
Yeah, and you're going to finance everything you purchase, period. You're either going to pay cash, give up interest you could have otherwise earned, or you're going to pay the third-party lender, whomever they are, interest, period. Mm-hmm. No exceptions,
None. Well, that's why it's a must-have.
Yeah, that's perfect. So I say often privately, as I'm speaking to my clients and prospective clients that are interested in real estate, I encourage them to find a local real estate group. In most towns, there are many or several to choose from. If you're way out in the country, you can, drive to the nearest town, find one online. Do you participate in real estate groups?
Do. So I'm in a real estate mastermind group that's at Dallas, Texas at Investor Fuel. We meet twice a year there. We're actually going to Nashville in early August. And then once usually in Scottsdale, Arizona. So it's a quarterly one. The other one is called Family Mastermind. It's another good one. And that one is a lot of people who have podcasts or have educational platforms and are selling their products. Those are two great ones. Plus, I also am involved like DIG, which is the old group up in Philadelphia. I still have a lot of friends up there. And I have not gotten involved in any in Southwest Florida yet, but I will. Because look, you can just go on a meetup. They'll meet virtually. They'll do Zoom meetings. You can go to a live event. They have live events. They also have the Zoom meetings if you can't make them. So it's very, very easy. If you want to catch up and meet up with other real estate investors or crypto people or somebody who's just doing basket weaving, you can get with any of these people in any of these groups.
Yeah. So you participate in the groups that you're members of. You speak there and it's in there, or however you do that, I'm sure if you were in town in Philadelphia, you'd probably go personally, wouldn't you? Just see your old friends.
Oh, yeah, totally. Yeah, absolutely. Yeah. I love going person. I love going to the event. It's way better. That's where you're networking. That's where the magic really happens, for sure.
Right. And there's always a meeting after the meeting. You go to the meeting and
there always is. Yeah. They have meetings and then they have subgroup meetings. Yeah. So their subgroup meetings usually meet in between a once a month meeting. So those are great. And those are better. Those subgroup meetings are better just because, it's a smaller group of people. It ends up being tighter knit. You end up having better relationships and more bonds with those people than the ones in the primary where people are living all over the place.
Yeah. Well, perfect. We're going on about 45, 50 minutes. Is there anything you'd like to share or say or in closing, Paul?
Yeah, till I met you, I didn't really know enough about the power of these policies and stuff. And I heard about them. I heard about politicians like Mitt Romney, Barack Obama, and others having these policies that were kind of like outside the system. And the way you can utilize these things, just how simple they are to set up, how easy it is to be able to borrow against them, pay them back, create more if you need more. You can create ones just for a certain purpose if you wanted to. Just the easy use of these things is the greatest. It's the best, most unknown thing out there, right? I don't know why they're not marketed more, and it must be a reason why they're not marketed more, but they are far and away the greatest products out there, and I use it all the time for my businesses. Right now, if I start another business, if I have some venture that I want to do down the road where I'm having some kind of storefront or whatever, I will borrow against it for that, do the same thing. I'd much rather have my own funds available than have to go to the bank and constantly fill out this loan application. Think about when you go to a car dealership. We're actually going to buy my oldest son a new car because we want him to have an SUV so he can bring all the stuff back and forth to college. So rather than they're like, our rates are great right now. I'm like, yeah, but I'm going to spend 2 or 3 hours sitting there filling out this application, waiting for it to go through this process, waiting for the documents to go through, where I could just write a check and give you the cash and be done with it right now. Like my time, you talked about before, time is your most valuable asset. And it's allowing me to buy time, but not have to get a bank loan on this here. So super valuable. Love these. I love the life insurance policies, the power of it. And I wish more people had them and utilized them and, take advantage of them like I do.
Yeah, me too. I'm doing my part. That's all I talk about. Daylight to dark. Well,
you're one of the few ones out there, James, too, on a bullhorn really out there that has a channel, has a podcast that talks about it. And I watch a lot of yours. I watch a lot of your podcasts just because I don't never know what I'm going to learn, what I'm going to pick up from somebody you're talking to. Well, so I think they're hugely valuable. Keep doing them because you'll eventually pull more and more people like myself into them. And I've tried to push other people to your podcast, and I'll continue to do the same.
Well, thank you. I appreciate you listening. I appreciate the kind words, and I'm going to keep doing them, until something changes, and I don't know what that something is. Maybe I'll be like you and hire more people to give authority and responsibility to, and probably not going to move to Florida, but I have a nice pool in the backyard. That's the next best thing, right?
Oh yeah, pools are great. You just kick it up on the chair and just sit there and enjoy the pool.
Yeah, actually, my wife, we bought a property a couple of years ago. We've been in there about a year, and so that was, I guess, we started looking at it 2 years ago in the pandemic. Everybody got afraid to purchase, and this thing sit on the market a long time. I don't really know why, other than people were afraid to purchase it or whatever. But at that time, too, we were thinking, because my girls, my wife, my daughter, they love Florida, right? All the beaches. And so I'm thinking, we should buy a property, a second home down there in Florida and rent it out for a vacation rental and have somebody manage it and do all that. And I'm so glad we didn't do that. I'd rather go down there and rent something for a week or 2 weeks or whatever. Now I say I'm so glad I shouldn't have done that. If I'd have done that, I'd probably be selling it right now.
Yeah, you would be. You'd be selling for a nice profit right now.
So maybe I should have done it, but I'm sure not going to buy one now.
The hassle. It's a hassle, right? That's a whole other business unless you give it to somebody to just manage or run for you, but it's never going to be managed or run as well as it would be if you did it. So yeah, it is like, and I think about this all the time too. I'd love to have a place out in the Rocky Mountains for skiing. If a deal comes along, I will do it. Don't get me wrong. But otherwise, I'll just do an Airbnb and just rent for the time I'm there and just budget for that because it's simple. And then you can change, right? You can change locations. Maybe you guys want to go to Fort Lauderdale one time. Maybe you guys want to go to Naples or Clearwater. You want to go look at different beaches. So best way to do it, just Airbnb it, go rent and forget about it.
That's what we decided. It works. All right, Paul, listen, I've had fun, very enjoyable speaking with you. Thank you for taking the time and coming on, and maybe we can do it again in the future. Okay.
Thanks for having me on. I appreciate it. It was fun.
All right.
I enjoyed it.
You're welcome. Look, have the best, nice rest of your day. Okay.
You as well.
All right. Thanks, Paul.
All right. Thanks.
Thank you for joining us on the Banking with Life podcast. If you're watching on YouTube, make sure to like and subscribe and click on that little notification bell. Otherwise, join us on Apple Podcasts and Stitcher for weekly content.